Crude oil last week traded bearish, breaching past the first and most crucial support zone where it was stuck for last few weeks in the 84-86 zone. In fact, it has moved towards 82. But can we consider this is a breakdown? Can we consider that now oil is going to fall further? And if yes, how low it's gonna go? Second thing is, yes, it is still delivering higher lows. Look at this drop, and this one. Can we still expect a bounce back from these levels? What should be our strategy in order to profit trading crude oil in the coming week? We're gonna see here with the help of charts and indicators. And towards the end of the update, I'll be sharing the trading levels, so watch till the end. Also, this is a weekly forecast, and I do share my twice a day updates for crude oil with precise levels so that we can all profit together, grow together, trading across sessions, trading across geographies. So first update is always with the Asia and Europe session, and next is before the US session. So subscribe to the channel, press the bell icon, do like, share, and comment, join the free Telegram channel for live market updates, and join the channel memberships here on YouTube to support the effort. Let's start. Do watch till the end. Now, first thing on the weekly charts here is you can notice, look at the swing here, then rise, then a retracement, then the rise, then a retracement. Now it has come down towards the first support zone, which is it has already taken, and now it is seen trading below 84-86 zone. Though right now it is delivering the higher lows, it is yet not confirming a clear breakdown. As in how price moves lower, as in how it trades below 82 in the coming week, you can expect 80, you can expect 77, and you can also expect further lower levels here. Now, one point you should note that the moving averages, since these have crossed over, these are trading bullish, these are trading with divergence, not yet confirming a clear reversal here, as these are still bullish. So what oil is trying to do, one probability which arises here is that, because see, I'll show you something on the monthly charts which will make things clear that what oil is willing to do here. But here on the weekly charts, one point here is the gap it is left at 67. Remember, it is not going to be a long-term reversal where you are going to see oil again trading below 56 levels. It is not going to happen. The lows which it is trying to achieve, maybe 70, maybe 67, 68 zone. These levels are going to remain the lows possibly for the near future, as might be cooling down for next few weeks. It can again rally later this year. So this probability is very, very strong. But I'll say these levels are not going to be taken. Again, mark my words, the levels at 55, 56 are not going to be there and are not going to be taken any point of time in the near future. So what it is trying to do in the coming week. Now see, look at these candles. Resistance here on the upside at 92, 95, pretty strong. Now when it starts the coming week with a drop, and if at all you see it is staying below 82 and 80, just stay with the cells, and then you can expect the next round of drop from here. And then in fact it can move towards 74, it can move towards 72 levels and 70 levels as well. But for now this appears to be too far. Look at the stochastic, this is already at the lows, this has come towards an oversold zone. Now this is a slight worry point, because see, it is not that oil cannot stay here in this oversold zone for a while, but it suggests that it cannot go deeper, or even if it goes deeper, the pullback will be stronger enough. So coming week, it might try to, or it is possible for it to trade bearish, but the recovery is also going to be equally strong later. If you see the MACD, now the story is different here on the MACD. When you look at MACD last week, we have mentioned that see, this crossover is coming at an extreme levels. And I have also shown you something. See, these were the highs with the Russia-Ukraine crisis, and these are the highs here now with the US-Iran crisis here. So now it has seen the same highs and now crossing over. What followed this was a great round of drop here. Now here at this time also the war is about to get over, but I think this time the fall is not going to be equally strong. It can try to stay bearish for the next few weeks. I think 55, 56 it might not break. There could be a little drop followed with the bounce back. That is what you can expect. But again, I'll say now 55, 56 is not going to be taken, even if it tries to drop 67, 68. And yes, the volatility which we had seen so far might get suppressed now. The momentum might get shifted to smaller volatile moves, or you can say smaller moves when it is bearish. And see what it will try to do with the smaller bearish moves. It will try to cool down this MACD to the comfortable levels before it bounces back. RSI just coming out of the overbought zone, looking downwards. So these two things we have discussed last week, and I had mentioned that now the possibility of a drop is increasing here in oil prices, and what a good move it is shown already. Now let's also have a look at the daily chart. See here, this moving averages crossed over. This was also one of the bearish indications which we had seen in the last week's analysis. Now notice what how it is trading, divide this from here, you can see symmetrical formation. Till here it was fine, till here it was trading in a range. Now this is coming out of this. My only point here is the last trading session, if you look at, the body size was smaller here. It is suggesting that the supports are getting stronger here. So now we have to wait for it to trade below 82 and 80 mark, and if these levels are taken, you can definitely expect a good fall from here, which can take it lower, which can take it towards 76, which can take it towards 72, 70, and in fact it can try to bridge the gap all the way towards 67 here. But for now, I'll again say this is not to be considered a long-term reversal. Slight bearishness here for few weeks might not confirm a greater reversal for the near term. I'll say the prospects for this year 2026 and for the next year also, oil is going to be the driving factor, and I'll again mark my words, this is going to go further highs from here. Though right now for the coming week we have to focus on how to make profit in the coming week. Moving averages are trading with divergence here, and now the moving average 20 period is sitting at 90. So it appears there could be stronger fall from here, where the moving average might come towards 85. Then it will again try to bounce back a little before taking the next direction. Stochastic here is at the lows. The MACD is trading bearish. It is diverging again. Notice the MACD is already at the lows. Right from the highs, we have seen a greater fall coming in. Now, so I will say, even if it tries to drop, I will say the momentum on the downside is going to be comparatively sluggish. What we had seen with the bulls here, the bull case was extremely strong. We have seen enormous rises here in oil prices. Now, once it starts to fall, the bearishness is going to be quite sluggish. That is what is my expectation. The momentum might not be there. And for this coming drop, the coming week is going to remain crucial. What it wants to do, or where it closes in the coming week, is going to remain important. RSI is at the lows here. Coming to the 4-hour, on the 4-hour charts also, look at this sideways move, and in my daily update I had mentioned, see, when it comes out of this, you can expect the next round of drop. What it has done, it has moved towards the lows here. Now see, moving averages are already trading with divergence, already staying bearish, and now you can see the support coming in at around 83 levels, and the resistance it is seeing at around 86. So again, this zone is getting crucial here. If you see oil trading below 82, certainly we have to stay with the sells from there, and then it is going to go deep towards 80, and it can in fact breach past by 80 zone, where 76, 78 are going to be the next targets here. For now, the yes, moving averages are trading with divergence, staying bearish. This can fall like this, go deeper before bouncing back a little on the upside. Stochastic already at the lows. The MACD is still bearish, looking downwards, waiting for a crossover here. It has not yet crossed over. And the RSI at the lows as well. So now see, let's also see the daily monthly charts. Now this is important on the monthly. As I have mentioned, see, monthly charts, if you look at lower highs, one pullback. Now see, this is the second bearish candle which is in making. And now as and how it goes deeper from here, we can definitely expect a good fall. But remember what it is trying to do. First of all, moving averages on the monthly charts have crossed over. You can see what has happened this time. We had seen prolonged stretch of bullishness. Now this is crossed over also again after 4 years on the buy side, and hence this bullishness might stay here for a while. The next thing, if you notice here, look at these highs, look at these lows. This is a long term channel. See, this is almost for the 4 years. Now what it has done here, and if you see the charts here, it has formed a very good base at 55, 56. So now it appears it is not going to be breached. That is first part. That is 55, 56. It is not going to break below any point of time in the near future. Second part is where it closes and how it trades for the next couple of months is important. Possibly what it can try to do is something like this, where the highs are done, prices comes down, stabilizes around 70, 67, 65 zone, and from these levels later half of this year we can expect a greater pullback. So this is what the probability which I am looking at. So the retracement for the next couple of months is not a sign of a greater reversal. Be watchful of this. Now look at the stochastic. This is also hit the top, now looking downward. So next couple of months it can try to cool down further before reversing here. Remember, it has already formed a triple bottom before bouncing back, so it has still got room for further rise. And now see, the important part is the MACD. Look at the MACD. This rise, then the retracement, then bigger rise, and see, it has stayed bearish for almost 4 years here. Since the crossover at the top, we have seen bearishness prevailing. Now this is crossed over after a while. Now, see, can you look at these convergences? Can you look at these convergences? So it is not yet a reversal. What it is trying to do, it can converge for the next couple of months and then again starts to move upwards. This is what a very strong probability which you can expect from oil. RSI is at the top trying to cool down, which is a slight bearish indication. So what you should do now? And yes, before I give you the trading left, if you are willing to learn this art of trading, be a part of my mentorship batch. The 40th batch starts 22nd of June. And yes, this also comes with an offer that we ensure that your fees, whatever you're going to pay for the batch, we ensure that you recover your fees not only by just trading with our signals, but also our handholding is there where you get the clear signals with targets so that you can profit and recover your fee. And then it will be a call whether to trade with us or trade independently. Reach out to me for queries. My Telegram and email IDs are there in the channel and video description. Those looking forward to just trade as per the signals right from the day one can be part of the signals channel today itself. Connect with me. The details, contact details are there in the channel and video description. Also, it is very, very important for you to have a trusted partner and a recommended broker where you can trade safe, which offers you swap free account, lowest spreads, no hidden charges, easier transactions, and easier withdrawals from across the globe. And most importantly, your funds are safe, your withdrawals and deposits are processed in real time. Join the recommended broker and enjoy your trading journey. Now, with this, what you should do now, again, the supports earlier are going to be the key resistances. So, yes, you can buy at 84, expect 84.7, expect 85.4, and then 86. Till here, this complete zone between 84 to 86 is going to remain the key hurdle for oil on the upside. If it trades above 86, you can expect bullishness to prevail. 87.3, 88.2, 89.3, and then 90. This is going to be the next. Then 92, and then 94. 94 is an ultimate one. In the adverse case, if at all it trades beyond 94, it's a reversal. You have to be careful there. Anything and everything is possible. These are markets. On the downside, I will only recommend you to sell here at 82 levels and expect it to move towards 81.1, 80, 78.55, 77.4, 76. Now, below 76 is where the bears will take over completely. 75, 73.8, and then 72 levels will arrive, below which 70 is a must, and then it will fill all the gap towards 67 in the near future. Though for now it appears difficult, but nothing is impossible. These are markets. If the Strait of Hormuz opens tomorrow, the prices might plummet sharp, and this drop is going to be very, very hard. Let's see if at all it happens. This case appears difficult, but yes, slight cooling in oil prices is possible, where we can see moderate bearishness prevailing for the next few weeks before it bounces back up again. Take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for your queries. Join the free Telegram channel for live market updates. And join the channel memberships here on YouTube to support the effort and for getting access to the exclusive member specific content. Thank you. Have a great profitable trading week ahead and a happy weekend. Thank you.